Welcome to TheStreet.com TV. This is Wall Street Confidential. I'm Farnoosh Torabi. Sitting here is Jim Cramer, markets commentator for TheStreet.com. Hi, Jim.
How are you?
Good, thank you. You've recently filed a story on Real Money discussing Apple's quote-unquote top.
Right.
And you say it's far from being reached.
Well, I think that it's important when you have these situations where stock goes up, up, and up, and I've been commenting this on Stock Picker endlessly, is that you have to have a game plan for what the event is. There is a catalyst here. It's the iPhone. The history of Apple is to bring out new products. When they bring out new products, there's a big run-up. When the actual product comes out, there's a sell-off. This time could be different. Maybe we don't get that. But what I've been telling people is to scale out as it goes up, but don't sell what amounts to the house's money. So as it goes higher, you should be smaller and smaller in it with the ability to be able to rebuild it on any decline. Ultimately, this is a strategy that is an institutional strategy. If I were an individual, I would have tremendous faith that Apple will come up with iTV, whatever, and maybe this is all just a big blip. We have a sophisticated audience who watches this video, and we have some people who are not really capable of trading. And I want to please both constituencies. The constituency that's not really capable of trading because of the intricacies of trading on a daily basis should pay no attention to what I'm saying. Because they should understand that I like Apple. But I also believe that when you see signs like that The Economist says that puts Apple on the cover, well, they're not going to be on the cover again next week. But a particular data point that I mentioned in Real Money today is that AT&T called me on Friday and asked me if I wanted an iPhone. Of course, I'll pay for it because I understand the journalism rules. But it amazed me that they needed to do that because I've got an Apple store a mile from me, and I just thought I'd kind of, or I have an AT&T store across the street from me, basically, probably a 3-minute walk. And I thought that that's where I'd get my iPhone, and AT&T assured me that they won't have it. So what that tells me is if you have a scarcity of that product that you have to go to Texas to get it, there's a lot of upside here. So traders understand that you scale out on the way up and then you get ready to buy some when they slam it. Investors, it's all a big blip, and just own it.
What are signs that we are heading towards the top? What would be signs, general signs?
No. These kinds of situations that are fashion situations are dependent upon the pipeline, whether it be Hansen, whether it be Crocs, whether it be the initial Reebok, which I talk about in Confessions of a Street Addict. You know that the top doesn't come until the pipe is filled. In other words, when there's more supply of iPhones than demand, that's when the top will occur, and not until then. So that is the history of the way. Again, remember, a lot of stuff that I talk about is just the history of it. We're bringing in a lot of new investors, both in Mad Money and here. And the new investors kind of some of them don't want to learn the ways of old. I saw this again in 1999 and 2000, where people like me who got cautious were completely ignored. Now, it always surprised me that I was ignored, given the fact that I've been historically a huge bull. So what I'm saying is, listen, this is the way it's happened in the past. Don't say, oh, Cramer's being really dogmatic. I'm just telling you what's happened in the past.
Can I get quickly just your opinion on this recent headline with Apple concerning, the rumor that they want to now go to Hollywood studios and say, let's make new films for iTunes for $2.99.
It's worthless.
Worthless.
These kinds of things don't matter. It's like Starbucks. I mean, there's a lot of stories that appear in the media that I always used to say at my hedge fund desk. Earnings per share impact. Earnings per share impact. That has no EPS impact. So forget about it. That's noise.
Should Netflix and Blockbuster be worried if this ever materializes?
Blockbuster, I've been having a sell on ever since Antioco was fired. Netflix, I've always abdicated to others because I've never been able to figure it out.
All right. That is Jim Cramer here on Wall Street Confidential. This is also TheStreet.com TV. I'm Farnoosh Torabi. Stay with us.